Welcome back. Joining us to put the day's markets action into perspective is Viv Govender from Rand Swiss Offshore. Viv, thanks so much for joining us today. Now, as I've said, volatility is the name of the game when it comes to the markets action we're currently seeing. Is this mainly just on the back of those heightened tensions in the Middle East?
It's a couple of things. It's the fact, I think last week we saw inflation coming higher than expected, meaning that the rate cuts for this year have been cut down dramatically. From the start of the year, we're expecting 4 or 5 rate cuts. Now it's closer to 2 or 3, maybe even 1 or 2. And the market had rallied in the last, say, 6 months or so, based on the idea that we were going to see rate cuts come through this year. And so I think they were primed for any kind of like negative news around the Middle East or whatever it may have been to come down a bit.
Now, I want to talk about the oil price. You'd expect the heightened fears or the geopolitical tensions that are currently happening would have an impact on the oil price. We did see it rally last week, but this week prices have been somewhat muted. I think the last time I checked, it was trading under $90.
It's just over $90 the last time I checked, so it hasn't really spiked up dramatically. Maybe they were anticipating something like this year because the Iranians were telegraphing this particular, attack for probably a week or two in advance. So the oil price had like risen, to over $90 or just about $90 from a lower level in the last 2 weeks. So maybe that was what we were seeing was the market rate price in the last 2 weeks.
You're right. It's just above $90 per barrel at the moment. Now, over in Asia, we had GDP numbers out from China. Growth on that end beat market expectations, expanding 5.3% in the first quarter, pretty much kicking the year off on a good note. Viv, do you think China's back on track when it comes to momentum around growth, considering there's still those, property sector risks as well as trade tensions with the West?
No, I think we may have some, temporary, reprieve for China, but fundamentally, a lot of the structural issues remain. The long-term one is, of course, demographics, which they can't do much about. But like you mentioned, the trade issues, the issues around what's happening with the tech sector, the issues on the property sector, those things need to be solved first before we can see a rebound. And I don't think we are quite at the point where we can say it's in a reasonable certainty that these problems already been resolved.
And now in local company news, Purple Group, the owner of Easy Equities, has returned to profitability, recording upbeat profit as well as a decline in expenses. What's your take on this count? Is it one you follow?
It is to some extent. Obviously, what they're trying to do beyond just the, the profitability or not is something interesting. They're trying to basically have a mass market stockbroking service for the public. But as they said, their cost per unit is falling. Cost per account is falling. They have substantial assets to manage under that basically platform. Something like 50 billion. They have almost 1 million accounts open on the platform. Up till now, it's been very difficult to operate something like this here, just because the cost per unit or per account is quite high. When you consider the amount of money that you require to basically earn back from it in terms of percentage of the total assets and management, the amount of assets you need to have is quite high as well. But technology improves and the costs are coming down. So it may just be this is the right time to launch something like this year, because previous ones like this that have been launched have not worked out, either locally or internationally. But it could just be that now we're at a point where the technology is good enough that we can actually launch something like this year at a profitable level. And hopefully that's true, because more people that are involved in the stock market, the better it is for them.
And market's quite happy about that earnings report. That share price is up 16%. I mean, it is, a small stock, but I guess any green is welcomed on this end. Afrimat, one that's been a market fave for quite some time, the group expects to deliver annual earnings growth of as much as 26%. That update quite thin. What have you made of Afrimat's performance so far?
Yeah, look, I mean, I think it's reasonably good in terms of the performance that's come out. The share price hasn't really reacted to it, but if you look at it over the year to date here, there was a little bit of a run up in this, say from about Friday, a couple of weeks ago, till now it's up over 10% from that point, even though today it is down. Why exactly that is, there was some news around it over the last couple of days and so on. Maybe that was kind of stimulating the market demand. But yeah, look, I mean, I do think that the kind of recovery we've seen coming through commodities and so on might be positive for Afrimat if we do see more expansion in capacity out there.
Yes, and I just read that that Lafarge deal was also completed sometime last week, I think, where they've gotten approval from the Competition Commission. That move into construction, well, deeper into construction, what have you made of that?
Like I said, betting on the future, if it does work out in terms of more capacity in the country, it'll be quite good. That being said, we've had some setbacks, locally, not beyond the sector itself, beyond the commodity sector, but things like Transnet and so on that need to be resolved, I think, before we can be more positive about the story.
I guess we have to leave it there. That was Viv Govender from Rand Swiss Offshore.